I just owed $15,000 in taxes, and I just cried about it earlier, so let's talk about it. For this tax season, I actually file under a content creator or influencer, and I've been influencing for the past 2 years now full time. And let me tell you, the amount of money that I made this tax season compared to the last tax season is significantly different. Last year, I only paid $1,000, and this year I owe 15 times as much, which I'm so blessed and I'm so grateful. But when it comes to tax season, 100%, these are things that you should do as a content creator, and that is save a portion of your payments that you'll get so you can go ahead and save up for tax season. And here's something that a lot of people do not tell you: when you work a traditional W-2 job, you cannot do tax write-offs. But when you're doing content creation or you own your own business, you're able to tax write off a lot of things actually. And one that I actually did not know is rent. So the apartment that I'm wanting for this year, I actually get to tax write off a percentage of it because one part is going to be my office space. But let's not get ahead of ourselves. If you're wanting to get into content creation and influencing, digital marketing, anything like that, just do it. Just do it. Trust me. And do not let taxes scare you.
So that was a really good video. And one of the things I liked was how she mentioned saving a portion of her profits for taxes whenever she's going to go and file her taxes during tax season. Generally, under most circumstances, self-employed individuals do not have taxes withheld for them throughout the year. They either have to go in and make estimated payments throughout the year. Maybe they're an S corp and maybe they're having a little bit of taxes paid for them through payroll. But then a lot of self-employed individuals don't pay any taxes throughout the year, and they wait until tax season to go into their accountant or their tax advisor, file their taxes, and then they find out how much taxes they owe. And a good general rule of thumb, and the big difference between self-employed individuals and people who work at a W-2 job, people who are employees, is generally if you're W-2, your employer is going to be withholding federal income taxes for you. They'll be withholding state income taxes for you, as well as Social Security and Medicare. And for my self-employed individuals, this is one of the taxes that generally always catches them off guard, because just self-employment taxes alone is 15.3% of your net profit. Now, you do get to deduct half of your self-employment taxes, but this tax is added on top of your federal income tax. And if you live in a state with a state income tax, then you have the state income tax as well. And for self-employed individuals, they're not having these taxes withheld for them throughout the year unless they already know the consequences of not doing that, and so they've started making estimated payment. And a good general rule of thumb for my self-employed individuals, a good starting point is generally going to be 30%. And for my self-employed people, one of the things that I commonly get asked is, what is a good starting point? How much should I save for taxes whenever I'm starting my self-employment journey? And a good starting point is generally going to be about 30% of your net profit. If you can save 30% for taxes, maybe park that in a high yield savings account, or just go ahead and start making those estimated tax payments. That's usually a good rule of thumb and is a great starting point. Now, of course, the more income you make, that 30% will start to creep up.